Hello and welcome to Technical Analysis 101, where our senior market analyst Daniela Hathorn tries to teach me the wonderful and mysterious ways of technical analysis. So let's dive straight in. What are we looking at today?
We're going to be looking at the Fibonacci retracement.
Okay.
Sounds very fancy, but essentially there are these numbers called the Fibonacci sequence, but I'm not even going to try and explain what they are because I have no clue.
Fibonacci was a mathematician,
yes,
right?
they were derived by an Italian mathematician. There's a sequence to them. They're supposed to mean something in nature and in the world itself, but you don't need to know what Fibonacci numbers are for this. Essentially, all you need to know is that there are certain Fibonacci levels that are expressed as percentages on chart, and they can give you support and resistance and entry and exit levels.
Okay, I mean, it sounds very technical, numbery wise, so I imagine it's going to be easier once we see a chart. So should we dive into the chart?
Yeah, so we are back with the pound dollar, so a cable chart. And this is just, the normal price action. We're going all the way back to 2022 here. And the way you do a Fibonacci is you select a range. Usually as it's a specific move. So for example, here we're going to do a Fibonacci from the highs in January 2022 to the lows in September 2022. Okay, so to draw a Fibonacci, you'll just select the Fibonacci retracement, select the high and the low, and then automatically these levels will appear. So you can see here we've got the 0, which is the starting point. Yeah. 23.6, 38.2, 50, 61.8, 78.6, and 100. Those are the natural ones. You can modify this in any way you want. I leave the standard Fibonacci levels. And what this is essentially telling you is from the move that we had in January 2022 to the lows that we had here in September, so far, this move would suggest we've retraced that bearish trend. We've retraced 23.6% of that. If you touch here, you've retraced 38.2% of that move. 50, so half of that move is now being retraced. So that's essentially what these lines tell you. Now, how do you use them in trading? Well, it's thought that these lines attract interest from traders, and they tend to indicate good levels of support and resistance. So for example, just by looking at the chart and the price is already there, you're not adapting the price, so you just draw it automatically. You can see that, for example, here, right, the highs that we saw in December last year and also in January this year, you can already tell that they found resistance along that Fibonacci. Looking at other points, for example, here in May and beginning of June this year, we already saw that we saw some daily lows around this area, some confluence. So it's thought that these levels attract, especially levels of confluence and specific levels to watch out for. Even back here in November, this 23.6 Fibonacci. So that is pretty much how you use them. You use them as pinpoints on a chart that you think you could see either a reversal or a support and resistance, a good entry point. Once my asset has crossed the 38.2 Fibonacci reversal, I think we'll get a bounce from there, or I think we'll see resistance. It's pretty easy to use. You just select the region you want. You don't have to calculate anything. The chart usually does it for you. And then you select the percentages that you want if you don't want to use the standard ones. And yeah, that's pretty much it.
And do you always go from a particularly high position to a particularly low position? And is it always on a long-term scale as well? Or is it can you do it on a day-to-day scale, for example?
You wouldn't do it on a day-to-day scale. Fibonacci's are more longer term, and it doesn't have to be downward, it can be upwards. So let's say you wanted to do from this low to this high here, you would do the same thing, select this one first and that one, and then it would just flip. So you would be looking at the reversals from high to low. So let's say, for example, you're here, so you're in December, mid-December. So far this move has happened. So you paint the Fibonacci from here to here, and then you're looking at, okay, we've seen a pullback. How much of that pullback has retraced what we've seen so far? So you can select anywhere you want. It's just how you read what it's telling you. And essentially the Fibonacci is to tell you this much of the prior move has been reversed or undone, and these are areas where you may see confluence and you may see traders attracted to.
And so this doesn't, compared to the ones we've done previously, so whether it's measuring volatility or momentum or the moving average, they seem to kind of give you an understanding of what's happening in the market, whereas this seems to be purely mathematical. Mm-hmm. Is that right? It's simply a number that Fibonacci has derived, and traders just like that number.
Yeah. Well, the reason behind these numbers is they do have a significance in all aspects of life. Fibonacci numbers are present everywhere, and markets are no different. So, as you were saying, yeah, with like moving averages or the RSI or the oscillators, you're using previous price data to do that. And here you are as well, because you're selecting a prior move, but it's not taking the day-to-day data and calculating. It's literally saying, okay, this is the move we've seen. What are the percentages along those lines based on the Fibonacci? So I think it's a lot more visual. And it's just, I think, again, going back, every indicator should be used in correlation with others and not as much isolated. But it's a great way to identify, as I said, key areas of resistance, support, where you may see confluence. I mean, look at this one, this 61.8. You may believe in it or not, but we saw some resistance here in December, came back to rest in the Fibonacci below the 50, saw a little bit of support there. When we broke up once again, we saw resistance and went back down to that same level, as you can see, back and saw a little bit of consolidation before actually managing to break and then finally moving up towards that, beyond that 61.8. So they do have a significant in charts analysis, and it's a very visual tool.
What are some of the best kind of indicators to use with it? Would you use this with the RSI, for example?
Yeah, I think the Fibonacci is an interesting one because it's very visual, and it's just, I think it's an easy tool to have always on the chart. And for example, this is the RSI down here, and you could be reading, for example, an RSI breakout here. You know, we've got a little bit of overbought momentum. We're going to reverse lower, and then you could be, okay, this reversal's happening. So where could we see, if this bearish trend continues, where could we see some buying support coming in, some resistance? Okay, well, maybe here, the 61.8, because we've seen prior support there. As you can see, it's a key Fibonacci level, you know, 124.49 is close to 124.50, a bit of a psychological level as well. So it's kind of that thought process.
Yeah, because I mean, just looking at this chart here, so you can see it obviously rising up there, breaks through, it hits 61.8. And if you look down here, that's right on the level of overbought.
Yep.
So, you know, it could be telling us, you know, that there's bearish sentiment in the market. And if it's hit there, then it's likely to go back down.
Yeah, it's also a good visual signal. Okay, we're starting to see that overbought, because you can see we had overbought conditions here as well.
Yeah.
But now we're also nearing that Fibonacci, which, you know, has been potentially resistance in the past, or just because it's a Fibonacci, you know that traders may focus on these levels. So it just gives you a little bit more of a reason to maybe think why you would see a reversal.
What are some of the drawbacks to this? Because obviously, I imagine because it's a purely mathematical thing, what are some of the drawbacks?
Well, there's many Fibonacci levels to use. So one of the drawbacks, I guess, it's knowing which ones are the right ones, or knowing which one other people are looking at. And just because there's a Fibonacci doesn't mean that it's going to act as resistance as support. You know, sometimes we see price breaking through Fibonacci with no resistance or support at all. So yeah, sometimes it can limit the actual information it gives you. But again, if you use it in correlation with other indicators, it can be very, very helpful, even though not every time it's going to give you an accurate resistance or support.
So once again, it's one of those indicators where you want to use them all kind of in conjunction with each other, and you kind of take little bits from each one in order to kind of give you an informed decision.
Yeah.
And I imagine the more you use them, the more patterns you see, and kind of the better trader you become.
Yeah, and I think all about trading and technical trading is being comfortable with different indicators. The more you use them, the more you learn about them. And it's, you know, they don't work the same for every single trader. You have to make it your own. Just because I or someone else uses a Fibonacci or an RSI like this doesn't mean you have to use it like that. You can build your own system that works for you and gives you certain signals that you look for. And I think that's, you know, the beauty about technical trading is that it's not the same for everyone, and you can make whatever you want out of the picture. So the more you use them, the more comfortable you become, and then you can use them in correlation.
Brilliant stuff. I mean, thank you. I mean, honestly, as we go along, each one that you kind of teach me, I'm learning more about the next one.
Yeah.
And they make sense faster.
Yeah.
And you can see how they're used in conjunction. So thank you very much.
You're welcome.
And thank you for watching. If you enjoyed this video, give it a like, give us a subscribe, and we'll catch you at the next one.